Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 28th, 2021. I am Frank Ochoa, aka PivotBoss. It is Fed Day. The FOMC statement and Fed interest rate decision will be made later on today after a two-day meeting here. That will be at 1 o'clock p.m. Central Time, 2 p.m. Eastern. The open price at that hour will give us our new key level. That will be very important. Here's the key level from last time. That was June 16th. We saw a pullback into the close on Wednesday, a pullback Thursday into the level, and a sell-off into Friday before we bounced to new highs. Over here, very similar price action as well. Last couple of times, we've had, this was the January pullback here. That's the level day. You sell off. Friday, you were on the lows, and then by Monday, failed new low and go. Over here, similar price action. You close here on Friday lows, and then you pull back a few days before going to new highs. So the other level here was April, same deal. Pull back a little bit before you continue higher. So we'll see how we play out this time around. Obviously, with the way that the market's playing out right now, it has a very good range that's developing at these highs. The 3-day narrow range that finished was finished compressed. It's now working on a 4-day narrow range. If the market does remain within the range today, we will have a confirmed 4-day rather, but just working off the 3-day, we see about 115, 117 points of potential expansion that could be seen. If it rejects, say 4,400, if we can't get much beyond that zone, then perhaps that could be a sell that leads to a pullback to about 4,300, maybe 42.85, and that zone would be about a measured 115-point move, and it would be in line with what we've seen here recently as well. That could provide another bounce opportunity heading into next month. So again, we'll see how it plays out. Narrow 4-day range here. A violation of that range could trigger a quick pullback over the next couple of days. If we take a look at the NQ, the NQ saw quite a bit of selling pressure in the previous day. That was ahead of the FOMC day. So usually you might have a couple of compression days ahead of FOMC day. Like back here, for example, a couple compression days. Here's your FOMC day. And instead we saw heavy selling pressure yesterday. Tech sold off tremendously. By the end of the day, we did see a little bit of a bounce today, a fade after trend day, and now we are testing 15K from below. Previous support is just above that. This is a spot right here where bears will be watching, because if there's a rejection here, this could offer the best opportunity to sell it before a pullback into the end of the week, or perhaps into recent lows here. So again, if the market responds negatively to the FOMC statement initially, it could provide a little bit of a pullback followed by a bounce to new highs. This market remains very strong, very resilient still, and even if we were to see a little bit of a pullback, it could provide a tremendous bounce opportunity. Now for the NQ, we have seen bigger pullbacks. Here's the FOMC, and a pretty deep pullback compared to what we saw here recently in the ES. Over here, not much of a pullback at all before it continued higher. This was a little bit of an FOMC pullback before new highs, and same thing in January. A little bit of a pullback, then new highs. So again, we'll see how we play out. Keep an eye on 15K today. If there's a failure to stay above that zone, that could be an opportunity to pull it back some degree here. All right, let's take a look now at crude oil. Crude oil right now trading 36% of average range, of another very narrow day. As a matter of fact, 3 of the last 4 days have been tremendously narrow. We're in a range that's formed at highs after this tremendous bounce, and this range is going to be very important. Right now, again, on a 3-day basis, it's compressed 40% of average. If you were to put that up to a 4 or even 5-day range, that would be compressed as well. So right now, still in a very, very narrow range to begin the week. It's still hugging the previous week's close and the previous week's high, which are almost one and the same. So if price were to reject that zone, it could pull back quickly toward the previous week's midpoint. That's about 68.60 or so. So that might be about as far as we go downward if we were to pull back. Again, any rejection below 70 could be a bounce back up towards 75. So working within this range right now, we'll see which way we go with it. If we take a look here at gold futures, now gold, this one is down just a hair and remains inside that trading range that has continued to develop over the course of the last week. You can clearly see right here this range has been in play. That range has continued to develop above 1790, which is an important pivot. But the most important level on the board here remains 1760. So if price were to push down, 1760 still is the level to hold on a longer term basis. The short term level is 1790. We'll see if we can continue to hold that. If so, it suggests another continuation higher at some point. So right now, still range bound for gold, still range bound for crude oil, ES, NQ within developing 3 and 4 day narrow ranges overall, especially the ES and YM. And those could lead to a big move here pretty soon. Keep an eye on 15K in the NQ as we have the Fed on deck. All right, everyone, have a fantastic rest of your day, and I will see you in the trading room. Take care.